Something extraordinary is happening in the shadows of the global commodities market, far beyond the paper price you see on your brokerage app. While mainstream media focuses on interest rate speculation and daily stock movements, a silver blackout has been initiated by the US government to secure one of the rarest industrial assets on Earth. On December 11th, silver shattered every price record in 5 millennia of human history, hitting $64.66 per ounce. But this isn't just another price spike. It is a fundamental rupture in the architecture of a market that has operated under the same assumptions for nearly half a century. We are investigating the greatest supply crisis of the 21st century, where the Pentagon's appetite for silver has created a massive blind spot for global investors. In the next 15 minutes, to understand the depth of this blackout, we have to look back to 1996. For decades, the United States Bureau of Mines provided transparent public data on exactly how much silver the Department of Defense was consuming. But in 1996, that transparency ended. The Bureau of Mines was abruptly abolished, and military silver consumption was officially wiped from public reporting, becoming classified information. Since then, the Pentagon's appetite for silver has become the most consequential blind spot in global commodity analysis. While mainstream analysts focus on jewelry trends or silverware demand, they are missing the fact that modern warfare is now entirely dependent on silver's unique electrochemical properties. Silver possesses the highest electrical and thermal conductivity of any metal on the periodic table, a reality of physics that simply cannot be negotiated or substituted at scale. This classification wasn't an accident. It was a strategic necessity. If the public, and more importantly, America's adversaries, knew the true volume of silver required to maintain a 21st century arsenal, the panic we are seeing in the physical markets today would have started decades ago. Today, silver is no longer just a precious metal. It has been reclassified by the US government as a strategic critical mineral, placing it alongside uranium and rare earth elements as a matter of national security. Every Tomahawk cruise missile in the US arsenal is essentially a silver-dependent weapon. These missiles contain silver-zinc batteries, guidance systems loaded with silver contacts, and ignition mechanisms that rely on the metal's unique conductive properties. While conservative estimates suggest 15 ounces of silver per missile, industry sources cite figures approaching 200 ounces. With a stockpile of roughly 4,000 Tomahawks, the Pentagon has locked away nearly 800,000 ounces in a single weapons platform. But the missiles are only the beginning. The U.S. Navy's underwater fleet runs on silver. Modern torpedoes require approximately 500 ounces of silver each to power their 30 to 40-minute tracking cycles through silent waters. However, the most staggering consumption occurs within our nuclear submarine program. The new Virginia-class attack submarines and Columbia-class ballistic missile boats utilize silver-zinc backup batteries for emergency power and silent running operations. The data is clear. A single vessel requires between 96,000 and 257,000 ounces of silver. To put that in perspective, one submarine consumes more silver than many primary silver mines produce in an entire year. With the Navy planning to build 30 new submarines over the next 15 years, the Pentagon has effectively built a demand wall that the mining industry, currently facing stagnant production, cannot possibly meet. This is why silver was quietly added to the official critical minerals list in 2025. It wasn't just a label, it was the preparation of a legal kill switch for the free market. But the threat to American security isn't just an internal supply deficit. It is a massive geopolitical trap that the West has spent 40 years building for itself. For decades, the Western financial establishment operated under the delusion that global commerce was simply a supermarket, that if you had enough dollars, you could purchase any material you needed. That illusion has shattered. We are now witnessing the emergence of resource nationalism, where nations possessing critical materials are systematically denying access to those who need them. Today, the trap has sprung shut. China now refines nearly half of the world's silver. Even when silver originates in Mexican or Peruvian mines, the raw concentrate frequently travels across the Pacific to Chinese smelters because the West has regulated its own refining capacity into oblivion. This gives Beijing what military strategists call a literal kill switch. If China halts the export of refined silver, as they have already done with gallium and germanium, it becomes irrelevant how much ore is extracted from the earth. Without refining capacity, the supply chain for every nuclear submarine battery and hypersonic missile guidance system in the U.S. arsenal disintegrates. The Shanghai Futures Exchange recently signaled this institutional panic by executing an emergency weekend intervention, raising margin requirements on silver to a staggering 17%. This wasn't routine maintenance, it was a distress signal. While Western paper markets attempt to suppress prices, the East is functioning as a one-way valve. Silver enters China, but it never leaves. We have voluntarily placed our military's economic windpipe in the hands of our greatest strategic rival. While the military is quietly cordoning off supply for national security, The commercial world is detonating what analysts call a silver bomb. For years, the industrial narrative focused on solar panels, which already consume nearly 200 million ounces annually, as the primary driver of the silver deficit. But the real threat to the Pentagon's stockpile comes from a breakthrough in the automotive sector. Samsung SDI recently confirmed that their next-generation solid-state batteries require a silver-carbon nanocomposite layer to achieve a 900-mile range and 9-minute charging times. This is not a theoretical additive. Silver is an integral structural component that prevents the formation of dendrites, which cause batteries to catch fire. The quantities required are staggering. Conservative estimates suggest each solid-state vehicle will require at least 100 to 200 grams of silver. If merely 10% of global auto production adopts this technology, it would suck an additional 30 to 100 million ounces out of the market every single year. This creates what the sources call a double tailpipe effect. The Pentagon needs silver for the weapons of war, while tech giants like Samsung, Tesla, and Ford need it for the energy transition. Neither side can compromise on the physics. Silver's conductivity is irreplaceable. We are currently in our 5th consecutive year of structural deficits, with a cumulative shortage exceeding 678 million ounces. The math is simple and brutal. There is no longer enough physical silver to build both the green economy and the American defense shield simultaneously. While the public is being told to watch the paper charts in New York, the biggest player in the precious metals world just moved the goalposts. JP Morgan, the undisputed titan of silver trading, has executed a strategic pivot that signals the end of the Western-dominated pricing era. In a move that shocked the financial establishment, the bank relocated its entire London silver trading operation to Singapore. For centuries, London was the epicenter of global price discovery, but JP Morgan guess migration confirms that the future of silver demand and the metal itself is flowing to the east, where physical manufacturing and military stockpiling reside. More shockingly, institutional data reveals a transformation that is virtually unprecedented in the history of commodities. Between June and October 2025, JP Morgan reportedly flipped a 200 million ounce short position into a staggering 750 million ounce net long position of physical silver. This isn't just a hedge, it is a total structural bet on the supply crisis. When the very institution that has been accused of suppressing silver prices for decades suddenly begins hoarding nearly an entire year or guess worth of global mine production, the narrative of abundance is officially dead. This institutional smart money shift is the ultimate confirmation of the Pentagon's blackout. JP Morgan isn't positioning for a 5% gain. They are preparing for a market reset where the paper market loses all credibility, and the only thing that matters is the physical metal locked in a vault. They have recognized that in a world of 257,000-ounce submarines and 200 million-ounce silver bombs, being short on physical metal is a suicide mission. As the supply wall hits, the blackout moves from the shadows of classified documents into the reality of your local coin shop. We are witnessing a historic divergence between the paper price on Wall Street and the physical price on the street. Currently, retail dealers are charging premiums of 30% to 50% over spot. Why? Because the United States Mint and other sovereign producers are already struggling to source enough silver blanks to even operate their presses at full capacity. But here is the final, most terrifying piece of the puzzle, the Defense Production Act. Once the Pentagon realizes that prime contractors like Raytheon or Lockheed Martin cannot fulfill contracts for the F-35 or hypersonic missiles due to a lack of silver, they will not wait for the free market to find a price. They will invoke national security protocols to prioritize military contracts and potentially seize or freeze domestic supplies. History proves they will do it without hesitation. During World War II, the U.S. government borrowed 1.4 billion ounces of silver from Treasury reserves for the Manhattan Project to build electromagnetic coils. In the 1960s, they systematically melted down the public's 90% silver coinage to feed the hungry industrial machine. When national survival is on the line, governments do not respect private property rights or the paper price of a commodity. They respect the mission. By the time the general public realizes the kill switch has been flipped, the question won't be whether you can afford silver, it will be about whether the government will even allow you to possess it. Everything we have discussed points to a single, inescapable mathematical reality. The global silver market is currently in an extinction level event for available reserves. When you factor in the Pentagon-S classified consumption, alongside the record industrial demand of 680 million ounces, we are looking at a market where above-ground stockpiles could deplete within just 5 years. The banks are already positioning for this reset. While they use volatility to shake out retail holders, institutional heavyweights are quietly raising the floor. Bank of America has officially set a $65 target, while BNP Paribas is now openly discussing silver reaching $100 per ounce by late 2026. Even more extreme projections from industry insiders suggest that if the delivery infrastructure fails, we could see a vertical moonshot toward $200 or even $400 per ounce as industrial procurement officers begin panic buying to prevent production shutdowns. The silver blackout is the final warning. The 1996 classification of military data was the first step, the 2025 critical mineral designation was the second, and the 47.6 million ounce exodus from exchange vaults in December is the third. By the time the mainstream media begins reporting on the submarine kill switch or the battery bomb with the urgency it deserves, the opportunity to secure physical metal at these prices will have vanished. You are no longer just an investor. You are a participant in a global resource war. The choice is simple. You can trust the paper promises of a system that is currently fracturing, or you can secure the physical reality that the Pentagon, Samsung, and JP Morgan are all fighting to control. Don't look back at $66 silver the way people look back at $300 gold, wondering why they didn't see what was right in front of them. The kill switch has been flipped. The only question left is, are you on the right side of the blackout? Stay sharp, stay informed. I'll see you in the next one.